Good morning, everybody, and thank you so much for logging into this first session this morning, where we're going to be looking at transforming the future of banking. I'm Leslie Stones. I'm a freelance journalist with Brainstorm magazine, which is a partner for the Altron Technology Day. Excuse me. With me in the studio, I'm absolutely delighted to have my guests here who are going to speak about banking, and we've got... I'm sorry, I'm nervous. We've got Vaughn Naidoo, who's the Chief Technology Officer of Altron Managed Solutions, and Charlene George, who is the industry executive for financial services at Altron. Now, they're not going to give us a presentation today because this is going to be more of a chat, a discussion about the technologies that have already affected banking and the technologies and innovations coming down the line that will affect banking in the future and that will affect the services they are able to offer us. But it's a two-way street, really, because some of the things that consumers want and demand are also influencing the way the banks can behave. I'm thinking of things like WhatsApp, where the financial services sector dived into this technology when they realized that consumers actually want to chat to people and even service providers using WhatsApp. So we've got about 40 minutes for this session, and please don't make me guide the conversation alone, because as you can see, I just might go wonky. So you're the experts and you're the people on the front line that have to implement these solutions. So please get involved and type your comments or questions in the Q&A app, and we'll weave those into the conversation. First of all, we're going to start with a short video about the banking technology and how it's evolved to where it is. Let's take a look. Excellent. Thank you very much for that overview of how we got to where we are now. But let's talk more about where you think we're going in the future. In the last few years, banking has gone through some quite remarkable innovations with things like the mobile banking apps and the tap-to-pay credit cards and barcode payment scanners. I've only just started using those barcode payment devices, but they're brilliant, hey? I'm such a late adopter, I'm sorry. But with the COVID lockdown, I think that's why I started actually using new things. And the COVID lockdown, with the enforced lack of communication and an ability to move and to transact, it must have changed the way banks need to operate and maybe speeded up the pace at which they need to innovate. Has it had much effect?
Yeah, so if you look at the economics behind the pandemic, there's been certain industries that have been put into a basket of potential winners. And those industries were defined as ICT, retail, medical supplies. And if you look at the industry today, you can actually see that playing out. Big investments into telecommunications to support our new work from home phenomenon. But banking was put into an actual basket of potential losers. So if we look at it from a pure technology standpoint, if we look through the eyes of the consumer, what we have seen is that the banking industry has responded. So we've seen new products come to market. We've seen the introduction of a virtual credit card with an ever-changing CVV number. We've seen the introduction of QR codes, the ability now to use a QR code mechanism to pay at a till point. And we've also seen low or no interaction for withdrawals at ATMs. And then from a pure banking industry perspective, we've also seen the adoption of cloud, which has moved from something that banks sort of was looking at very hesitantly to something that's been adopted quite aggressively. And automation is definitely increased in veracity. So COVID-19 has definitely affected digital transformation. It's definitely accelerated the adoption of technology.
Okay, and one of the things it must have helped enormously is the digital-first operators like TimeBank. Are they a serious threat to the old established players, or is there a lot more hype than action, really? And if there's action, how can the established players compete?
I think in that one, Leslie, we saw the digital banks enter the market, but with a very specific strategy. So yes, they will compete with the legacy banks, but legacy banks need to understand that they still have that trust relationship. Customers still trust their legacy banks. Secondly, legacy banks have the end-to-end banking capability, whereas these digital banks go more for a component within the banking value chain. So definitely the digital banks will be competitors that they need to be concerned about. But if I were a banker, I'd be more concerned about telcos entering the banking space.
Do you want to explain that one for me?
So absolutely. So with technology, we've always been spoiled for choice. As South Africans, we are quite we are enabled by quite a mature banking industry, mature infrastructure, which has created quite a sophisticated customer. We've got access to data, credit scoring, etc. What the telcos have is data around how people function. So it's not just your credit rating that inspires the amount that you can loan, etc. It's actually the way you use your cell phone. So we're using different data points. So it's all about leveraging data. Banks have access to certain information, and telcos have access to different information and different data points. So it also enables and opens a banking capability to be more inclusive to the non-banked.
Could I add to that? So, if we look at TimeBank specifically, in the past 3 months, they've exceeded 2 million subscribers.
In total, or just in the last 2 months?
In total. In total. So, TimeBank's not going to be the first or last digital bank. They've just sort of announced another digital bank that will be entering the market called Better. And I think that sort of theme is going to continue. I have, however, a small or differing opinion. I think there's going to be a further sort of competition from outside of the banking industry. So there's a product called Yuibao, which is a Chinese-based product. It's the biggest savings product in the world. They have about 180 million assets under management. And it's built of the...
What's 180 million what?
So it's just all the assets in terms of their portfolio that they're managing, which includes the value store of the e-wallet. So it's built on Alibaba's sort of platform, and it's focused on accessing dormant e-wallet accounts, and it's focused on accessing funds that's not being used. So they've used that to create a savings account, and within that interaction there's no branch, no human to actually conclude it. And then if we look at something simple as Uber, Uber came into the market, big growth, and they started to notice that in their onboarding process, what was happening, there was a big fall off, about 30%. And it was a single field which talked to a debit card number.
That was people who were passengers wanting to use Uber, and then
It was actually people that wanted to be a Uber driver himself.
Yeah.
So basically subscribe to the service from a business perspective. But what was happening is that they did not have debit accounts. So Uber partnered with a fintech, and overnight they became the third biggest acquirer of small to medium business accounts. So I think the digital banks, the neobanks, will definitely provide competition in the industry, but I think there's definitely outside forces that will also affect it.
Okay, because that Uber thing brings me to another question, which is, maybe this is a difficult question, controversial question, I don't know, but South Africa, we're forever hearing about the unbanked population. I mean, people like me, we've got choices. We've got a multitude of banks looking for our business. But we've got a massive unbanked population. For a start, I don't know the size of that. Maybe you can add some figures if you know that. But are there any technologies coming that can help to reach those unbanked people, maybe the people who don't even have a formal address, certainly don't have access to a credit rating? And is there anything that can reach those people, help them manage their money better, and yet still be affordable enough for the banks to actually think this is a viable market, which I suspect might be a sticking point?
Would you like to take
Who wants to take that one?
Take that one.
You can both
Lizzie,
dive
again,
in.
I've got to go back to data points. I've got to go back to cell phone technology. We've seen a huge uptake and a huge pervasiveness of banking over cell phone. And that speaks to the data points that our cell phone, our telco companies actually have access to. So a very good example is a data point on a banking client would be a person who buys blueberries at Woolworths is more likely to pay for the repayment of your loan. But we don't have that banking information from a telco perspective. So from a telco technology perspective, what you have is something like a person who interacts with a few close members of their family or their friends or community are more likely to repay a loan that they've taken out. So it's about using the data that you've got available to you and the technologies that are available in, for example, the telco space. And that's how we reach the unbanked.
So is it going to be the banks doing that, or the telcos are going to come in as a kind of rival bank?
I'm going to leave that one to you, Vaughn.
So, I think if we maybe take a step back, there is a definite digital divide in the country. And I think there's a lot of problems that we need to sort of address from that perspective before we can reach everybody. So you've got the digital divide. You've probably got a adoption issue in terms of trusting the bank with your funds. You've got issues to solve that talks to cost to serve in the remote areas. So I don't think it's a single faceted answer that talks to technology. I think there's a whole host of things that needs to be taken into account. It's a problem that's been around for a very long time, very topical, but something that's not really moved forward. But
everyone talks about the fourth industrial revolution is going to be the one that's actually going to finally close that gap and not widen it. I hope that some innovations are going to come down that's going to really that's something that I think people need to apply their minds to maybe. Another thing is how do banks keep your loyalty? I mean, it's easy to go and join a bank, but how do you keep my loyalty as a customer? Is that an important thing?
I think it's definitely an important thing, Leslie, because we see that it's cheaper to serve an existing customer than to acquire a new customer. If you look at the first and second industrial revolution, we saw that banking was quite personalized. Your branch manager knew who you were, he knew your community, and vice versa. And banking was about deposits, withdrawals, and maybe a loan. Once we got into the third industrial revolution, into technology, where we had mainframe 3270, and for those viewers on the call, I'm giving away my age, my green screen age. But what we had was banks could now afford expensive technology, and we automated, which gave customers more variety. It gave customers more choice into ATM technology, into SASWIDG, cell phone banking, telephone banking, and that was really exciting. But the real excitement came towards the end of the third industrial revolution with the consumerization of IT. Now, what that means is that the customer became the driver of transformation for banks. It was the customer that was adopting technology faster than the banks could actually keep up. And so the banks that are successful are the banks that use that technology, use the data to be able to engage with the customer in a way that they see fit. So you talk about customer loyalty. Customer loyalty, I think, is about a customer experiencing value from you. So I've got a mum who's 90 years old, and she says to me, "Can't you do that on your phone?" Now,
Your mum says that?
My mum does.
Okay.
But now, while that might sound anecdotal, that is a heavily loaded question. What she's actually asking her bank is, do you remember me from the day when I came into your building society with a book? She's saying, do you remember the journey that I went on through the 70 years of banking? And we must remember that these relationships are strong. They are generations. They are over decades. So loyalty, people are loyal. It's a trust-based relationship. So that question is also, are you understanding where I am now in my life? Do you get me now? And even though I'm 90, I actually want to engage with you digitally.
Yeah. True, but I mean, to me, I'm just a number. My bank makes money from me. I don't make money from the bank, and the only reason I don't change, I've got no loyalty. The only reason I don't change is because it's such a hassle, isn't it, to change bank?
So if I can first add to Charlene's point, I think the one important thing which you are sort of raising is that you got to know your customer. Understand me, understand what my needs and my wants are. And that talks to personalization, but personalization at another level down. I think the second thing for me is that we got to start looking at things a little bit differently in the market. So if we're going to treat me as a customer as just an account number, as you mentioned, it's very easy for me to switch. However, if you engage me and you increase the engagement level, if you include gamification into my experience in working with the bank, if you start adding rewards to my behavior, then I think things will dramatically change and my want to move will cease and it will actually be very hard for me to move. But moving banks, it's not very, very difficult. There's lots of switching between them that happens concurrently.
I might have a try.
Leslie, on that, Vaughn gives kind of the technical version, which it is pretty easy to move. And I think what we need to take into cognizance is the loyalty factor.
Because what Vaughn is saying is that it's not really a technology issue. It sounds like it's a people issue.
It's absolutely a people issue. And being relevant, when you're relevant to your customer won't change. So even if I have a bad experience on the contact center or with a chatbot that gives me two options and I have a different question, and you can hear the frustration in me coming out of dealing with chatbots these days.
This has happened to you, hasn't it?
It has indeed. But if you remain relevant, know your customer. It's easy to know your customer and use that data. And customers are trusting us with their money, and they are trusting us with with our data. They are trusting us with we are trusting them with our data. They are paying for this. Remember, we don't do this. Banks don't do this for free. The customer is paying for the value they want to derive, and that might be, to a millennial, it might be interacting in a gamification way. And don't underestimate loyalty in millennials, for example. You know, they aren't the brats that we make them out to be. They live with a lot more purpose than we oldies do. You know, they are fighting for sustainability. So if you are going to be more meaningful in their lives, if you're going to add value in their lives, they will remain loyal to you, not because of a brand, but because of the value that you're bringing to them and the meaning that they have, that you have within their engagement.
Thank you for calling me millennial.
I thought she was talking to me. So all of this is happening online, isn't it? I mean, I don't know whether millennials have ever walked into a bank branch. And one thing, as an old person, one thing that intrigues me is the physical branches. You know, the days when you walked into the bank and it was this amazing edifice with the marble steps and the pillars. And we've still got that infrastructure. But as more and more happens online now, what's actually going to happen? I mean, should the banks be looking at these buildings and going, we just don't need them anymore, let's turn them into museums? I know that's not strictly a banking question, but what the heck is a bank going to do with the 10,000 branches it's got?
So I think pre-COVID, there was a steady decline in the amount of branches within South Africa, as an example. But the reality is you still need a place to serve your customer. So I think the look and the shape and the form of the branch may change. And there's some interesting use cases and studies. If you look at Lloyd's Bank, they went through a big digital transformation. They spent $3 billion. 6,000 jobs was affected in that process, but it created 8,000 more jobs. And 75% of those jobs was actually filled by those previous people. But what happened was that even though they went through this big digital transformation, micro branches started popping up. Some in the existing sort of footprint and some elsewhere. And it was very simplistic. It was often manned by 2 people with a tablet, sometimes with some physical devices like printers, ATMs, and bulk cash recyclers. So I do think there will be a decline in the footprint, but I do also believe that there's still a need for them, maybe just in a different form. But what about going and changing the game in terms of visiting a Starbucks and conducting your business? There are technologies, exactly. And there are technologies that allow for that. So I think the dynamic, we'll see it play out in the near future.
That's going to come down to trust, isn't it? Because I like that solidness. You know, if I'm going to hand over a bunch of money, I don't want to be handing over to a guy with a tablet that I've met at Starbucks.
Well, actually, those micro branches are in play today. You can see them in South Africa. So they exist. I think there is a level of trust that's needed. But like they say, once you've tried it once, it becomes a norm.
Once you've tried it once, you've got no money left. Who knows? So, we've got a couple of questions. I don't know which of you is best to take one of those. If you want to have a look at those. Is customer experience generating meaningful separation in growth?
Generating meaningful separation? I'm not sure I understand what that means.
No. But it goes back to the customer. Obviously, the people are interested in the customer experience and how we can increase that. Do you think, on that note, do you think that the technology is giving us what we need, or are technologies that are coming down the pipeline, are they giving the people who work in the banks what they need, or do we still need bankers who have some initiative, who can, skirt around some of the rules maybe, or do they have to, if they follow the rules exactly, are we going to get what we deserve? What we need?
So Leslie, on that, we saw that banks are transforming, and part of it transforming the customer experience is transforming the employee experience and the employee empowerment. And what COVID did was it actually took that priority number 16 to priority number 1, because the banks needed to be able to service their customers through their employers working remotely. So we definitely saw 2030 become 2021. The other thing is, with customer experience, we find employees, if employees are empowered, if they have the right information about the customer at the right time, at their fingertips, they're better able to service their customers, which improves your customer experience. What happened then with COVID was, while we were able to allow our employees to work from anywhere and enable them through the technology, it then brought other priorities to the fore. So we now had to secure that data. We now had to secure those environments. So a massive focus now on security. It also had a data compliance governance implication. So a massive focus now, lots of budget going into compliance, risk, and managing that.
Okay, and that's a pure technology issue, isn't it? To make sure you've got the systems in place to protect the information.
I think it's more than technology, actually. Vaughn?
Yeah, sorry, I was just thinking about the previous question. I zoned out for a second. And there's a very interesting question on there, Leslie, which is a big debate that talks to moving your payment platforms into the cloud. And my honest opinion is, yes, I definitely would. And there are technologies in play today that allows you to do that. So it doesn't just talk to the payment platforms, it talks to core banking that can actually be put into the cloud. I think cloud started off with a very negative sort of reputation from a security perspective. But as it's been adopted, tried and tested, a lot of those pain points have actually been mitigated, which is quite nice.
And to support you on that, Vaughn, this is where you have a lot of niche players and fintechs playing in this space to provide niche solutions and security. One thing I would like to add, though, cloud is not for everything. Cloud is not the answer for everything.
For what kind of things would you say don't go cloud?
Well, again, you've got to look at the value you're trying to derive. In the early adoptions of cloud, we found that moving to cloud could sometimes be a lot more expensive. But sometimes we are willing to pay that extra or that premium for the flexibility, the adaptability of cloud. So it's fit for purpose. It's about those applications that respond well. And again, you've got to be driven by the requirement.
And again, that must make it easier for the new digital first banks, because it must be easier to build that whole infrastructure from the start rather than try and sort of cut and paste it into systems that have been operating for hundreds of years, or at least 90 years for your mum.
Yes.
So, yeah.
So I mean, if you look at Time Bank and their acquisition of 2 million customers, if you were to try and acquire 2 million customers with a traditional bank, you would most likely have to build more branches, hire more people to get to that same sort of customer base. But with a digital bank, it's probably one server. That's all it takes. And that's the power of the digital banks. But one should not forget what the traditional banks have. And it talks to some of the earlier points that Charlene was making, which is they have hordes and hordes of data.
And if they know what to do with it.
Well, I think you've got to look at it from two perspectives. The one is that, organizations like The Economist are saying that data is a much more valuable resource than oil today. I don't think people will struggle to do things with the data. I think if you add a teaspoon of artificial intelligence, a cup of analytics, and a few other things to it, you have a very good recipe to compete with the digital banks. Because remember, the digital banks are often called challenger banks, and they don't have a big customer base, which means they don't have a lot of data. So if you look at the next evolution of banking and potentially where it's going to be behavioral banking, it's going to be experiential banking, and that's all going to be data-based. Today, based on who you are, by setting a few data points, you'll be able to know that you are either financially healthy, which talks to you are spending more than what you're earning. It talks to are you insured correctly? And those data points can build a health status and teach you to actually be a better customer. We saw the launch of the first behavioral bank in South Africa, which is obviously Discovery Bank. But that can be taken to another level, and that's where it gets really, really exciting.
That does sound interesting. That almost ties in with one of the questions we've got about, it goes back to what you were saying as well, Charlene, that younger generations seem to have brand loyalty, but they prefer convenience.
So on that, if convenience is of value to me, then I will stay, I will switch, or I will stay because of that convenience. Again, I want to go back to millennials are not the brats we think they are. They are more purposeful. So if convenience is a value driver for that individual millennial, and again, I stress on the individual, because we've got to see people as individuals, not as millennials and X's and Y's and baby boomers. But we've got to be able to serve the purpose. And if convenience is one of those, then they will move if it's more convenient.
So I want to add one thing to Charlene's statement, which is, if you're going to start a transaction digitally and it lands you up inside a branch, then you've got a problem.
You haven't. I've been there. Please open a new bank account, blah, blah, blah. I'm filling in all my details. It goes, please arrive at the bank branch. No.
And I think that talks to the convenience, and that talks to customer acquisition, how just easy it is when you're doing it from first principles and you're doing it from a digital-only perspective.
But we still need to figure out what to do with all these physical bank branches. Maybe we should turn them into banking museums one day. I don't know.
I'm not sure how much you're going to get, how much revenue you're going to build by turning them into museums.
There's going to be an awful lot. Is there going to come a day when, I don't know, maybe a long time in the future, when there is no branch? You were saying earlier you think that there will always be some kind of branch, but really? I mean, the technology is changing so much.
Leslie, do you remember about, was it 20 years ago when we said we were going to have a paperless society?
Yeah.
And?
I remember when they were telling us that there was no point in being a journalist because nobody was going to read newspapers anymore. I'm still reading newspapers. So yeah. So banks
I think you are the exception, but we are reading newspaper articles.
I knew I was exceptional. I knew that.
On our digital platforms.
So you think that there will still be physical branches?
I think they will be. I just don't think we will engage through a branch in the traditional sense.
Yeah.
You might, like Vaughn spoke to the, what was it, your micro branch?
Yeah.
Yeah, so I think there will still be place for a branch.
Because there's nothing now, is there, that we can't do online?
Sure, what we can't do online these days.
You can't get cash online.
True. Yeah, true. But you can get it from a hole in the wall.
True.
Yeah, okay.
I think there's an interesting question at the bottom.
There is, yes. What is your view on the bank of tomorrow? What will the bank of tomorrow will be? Will facial recognition become an option for banks?
Absolutely. And I just wanted to in that actually speaks to, I wanted to add on to Vaughn's comment earlier about Time Bank and or the challenger or neobanks having access to information. Those digital banks also have access to loads of information. You must remember in first and second industrial revolutions, you knew everybody's business via the cousin or the auntie having tea. And that hasn't changed in the fourth industrial revolution. We still know everybody's difference, except it's just not over a cup of tea. These days, it's through Twitter, Facebook, WhatsApp, Snapchat, etc. So we still know, we still have loads of data points. In fact, we probably have more information, and we've got to leverage that abundance of information. The question disappeared. I wanted to go back to the question.
Sort of related to that, I was just thinking it would be very remiss not to talk about cryptocurrencies possibly, because talking about getting cash out, do we need a cashless society? I mean, it would stop so much, hijackings and robberies if we had a cashless society. Can we get that? Is that achievable?
I do think it is possible, but if you allow me just to step back to the original question, which was, what does the bank of tomorrow, the future bank, look like? And I think you've got to look at it through two different lenses. The one is sort of an iterative process where you keep adding on. So you've got your bank as it is, whether it's traditional or whether it is a digital bank, and you start adding on things like voice to it. So you can now access your account using voice activation. So it identifies you.
Mm-hmm.
You say, hey Google, hey Siri, can I please get access to my account to pay the wife, as an example. But if you look at it through a different lens, which talks to first principle designs, I think you get a very different answer. So first principle design are the things that people like Jack Ma, Elon Musk use, which says, let's start from scratch. So if I start from scratch, do I need a bank branch?
Mm.
Do I need a card? Do I need an account number? Because why can't your voice be that single identifier?
Yeah.
So if you go back pre-1953, I think it is, there was no account numbers. The only reason account numbers was actually introduced into banking was because the first mainframe, called IRMA, could not sort on alphanumeric. It could only sort on binary numbers. And that was the actual creation of the bank account.
Oh, wow.
It is as simple as that. There was no rocket science behind it. No one sat down and sort of, what can we do? It was to solve that simplistic problem. So definitely experiential banking is the bank of tomorrow. I think we're starting to see a lot of it in the market already in terms of behavioral banking, as I mentioned before.
Okay. But the cash issue, we're still going to carry wads of cash around?
So let's use Bitcoin as an example. If you look at Bitcoin and based on blockchain sort of technology, what's interesting for me is if you do analysis on actually the CO2 footprint, the carbon emissions footprint that it's creating, it just is phenomenal in terms of energy consumption. I think the second problem that you have with cryptocurrencies today is that it's got a bad reputation. It's generally associated with sort of negative things. It's used within a ransomware context. But I think also, if you look at the fundamentals of an economy, it's based on things. It's based on trade.
Yeah.
If you look at cryptocurrency, it's not based on anything. It's based on supply and demand. So, what determines the value of a currency becomes not something that you as a country is doing well. And then I think that, for me, is the big challenge with it.
So is this something that banks are looking at, the traditional banks, are they looking at it, or are they kind of hoping it will never happen?
I've seen a cryptocurrency ATM in Sandton Square.
Ooh.
And I think that is the only sort of point where I've seen it. I've seen probably a year ago where one of the retailers launched a capability to pay with cryptocurrency at a PED. But that's been it. I think everybody is sort of afraid of it until we get to grips with it and understand it. There are a few cryptocurrencies, however, that are backed by banks, and those probably have a different lifeline.
Okay. So we're running out of time, but any kind of final thoughts on the most exciting technology or consumer behavior thing that is going to affect the banking sector instantly, imminently?
So can I go back to that question that that disappeared around facial recognition?
If you can do it quickly.
I'm going to do it quickly. And it's around the data, the facial recognition and the data that you get not from your bone structure, but how you communicate through facial recognition. So there's going to definitely, facial recognition is going to be used astronomically through technologies like AI, machine learning, etc. So I think the most exciting thing is AI, analytics, data, and how we actually use it, and how we use it differently, and compared to how we used it in the past.
I think you're probably right. It actually sounds a more exciting sector than I was giving it credit for.
It's very exciting, really.
It is. So thank you very much for those insights, and thank you to everybody who logged in and participated. I'm sorry we didn't get around to all of the questions because I was getting carried away in various other angles. And I'm sure that Altron will be absolutely delighted to take the conversation offline and continue if you've got any other comments and queries and thoughts about the way that you're running your banking processes and how that can be improved in the future. Please will you remember to use the app to rate the session and to fill in the post-event survey. You can also return to the homepage to pick your next session. And if you've got time, I'd love you to join us for the session I'll be leading in 5 minutes' time, which is going to be looking at data and analytics and artificial intelligence and how to use them more intelligently in your business. Thank you and goodbye.